Thank you, Chair, and thank you, Minister and Deputy, for being here. I had an exchange that I'd like to, with your folks when they came before this committee before, that I'd like to maybe ask you. And it really is this. I come from Alberta, spent my career building a business, and was always kind of, and it was in financial services, similar to yours. I always wondered why it was that the large Canadian banks never seemed to pay the income tax rate that was everybody in Canada talked about as being the rate for non-small business for corporate income tax. So I did a bit of research, and we had a back and forth about this, but I'm still perplexed, and I'd like to ask you this question and then provide the context as it is to the tax proposals. So Big Five Canadian banks on average pay around 19% tax on their net income. And the smaller banks, financial institutions that don't have international operations, pay the full rate. They pay about 26%. So that led me to believe, well, then it must be a lower tax rate in the other jurisdiction, which is the United States for the Big Five banks. The vast majority of their operations outside of Canada are in the United States. And yet, we always talk about, your government talks about, previous governments have talked about the tax rate in the United States being higher. So how could that be? So I went and looked at a number of the large United States domestic banks. And they are, in fact, paying a higher tax rate. They're paying 32%. So I'm not an accountant, but I'm having trouble reconciling that our domestic banks pay, that don't have operations globally, pay in the U.S. pay 26%. That domestic U.S. banks pay 33%. And yet our banks that have operations in both Canada and the U.S. and nowhere else to speak of pay 19%. I think there's a leak somewhere. And if you do the math on that, it's a leak that goes into the billions of dollars annually. Now, when your officials came before us, they talked about this particular initiative in small business going after $250 million. So all of the attack on small business people and on the wealth and job creators and all the angst and insecurity that is now baked into everybody's psyche about what's next. Why wouldn't you hunt where the ducks are with the big banks? If we could get them to pay what should be a fairly reasonable average between their U.S. operations and Canadian, we'd be billions ahead. I don't understand why year after year after year, Bay Street only, has a special rate. Maybe you're from Bay Street, so maybe you can help me with this.
Well, I've never actually lived on Bay Street. I've never actually even had any operations. My corporate headquarters were not on Bay Street. But maybe I could just identify a few things here. We were looking at some things in our tax code that we see are creating both a level of current unfairness and a dynamic that was going to make the challenge grow over time. So the current unfairness, I think it's relatively easy to describe when we talk about the what's called the income sprinkling measure. It's relatively easy to describe that if somebody incorporates and happens to have, if a woman incorporates and she happens to have children that are 19 or 20, and another woman incorporates and she happens to have children that are 13 and 14, it doesn't really seem like anyone would design a tax code to give the first woman a lower tax rate than the second woman. I mean, it's not, if there was a reason behind that, it strikes me as likely accidental. Certainly it's not one that makes sense for the long term. There's additional advantages, as we've obviously talked around passive investments. And what we're seeing, of course, is a trend towards private incorporation that means that the size of that differential between those two women or between people in those two situations is growing, because we saw a 300% increase in incorporation among professionals over the last 15 years. So that's a situation that obviously we don't want to have continue. So the idea that we're going to grow the size of a group that has a preferential tax treatment merely because they incorporate, in many cases merely because they're able to incorporate, doesn't necessarily make sense. So that was what we were looking towards dealing with, making the system more fair. In doing that, we looked at what were the particular advantages. So we saw this income sprinkling measure that you referenced, about a $250 million cost. But I would tell you that we haven't yet informed you of the revenue around the passive investment income, because the design has not yet been completed. So that will allow us to provide you with more information in terms of the size of that cost of that deferral advantage given to already advantaged Canadians. So perhaps I'd ask you just to suspend disbelief for a few months until we get to our budget, and to tell you that that's something that we think is really important to get on, because otherwise long-term we'll find ourselves in a more challenging situation. I can say that that issue is discrete from the issue around what our large corporations or what our banks should be paying in taxes. We do have a tax rate, obviously, for large corporations that's significantly higher than for small corporations. And I can't, I'm sure you've done the work to get to these numbers, and I'm not going to dispute them. We need to make sure that we ensure all corporations pay their appropriate rate of tax. One of the reasons that we signed on to the OECD approach to base erosion and profit shifting is because we want to make sure that large companies aren't inappropriately having expenses in high tax jurisdictions and taking profits in low tax jurisdiction. We don't want to have that. So we want to make sure that we have rules that appropriately force people to pay taxes in the jurisdictions where the business activity is actually happening. So we're doing more than one thing at the same time. I think that's what you'd expect us to do. And on top of all that, we, as you know, have significantly invested in the Canada Revenue Agency over the last 2 years, to the tune of about $1 billion over the last 2 years, in order to make sure that businesses and that individuals are paying what they should be paying. And that effort is what we think is fair. It continues to show us that there are opportunities for us to ensure that people are paying their appropriate rate. I don't know whether they're in the group of companies that you identified, because I don't have any personal knowledge of their situation. But we will continue to make sure that people pay their fair share and they're not doing things that are inappropriate.